My name is Barca. I'm a medical student with almost a decade of investing experience in stocks and real estate, and I have seen a ton of YouTube videos coming out talking about how HIM stock is about to explode, how investors are getting it completely wrong with the stock coming down recently, and I started doing a little bit of analysis, and I not only think these guys are completely wrong, but also I think bearish analysts like Morningstar are missing out on who the true competitors for HIMs will be in the long run. Full disclosure, I'm going to be talking about Amazon Pharmacy as the main competitor in the long run for HIMS, and Amazon's my biggest holding. I have around 59,000 USD in it, so I'll be slightly biased in the matter. Before we get started, let's take a look at the actual chart for HIMS and HERS. Now, the past 3 months, it's been down 43%. On the year, it's still up, but we can see that it's down around 50% from the highs it set in February, and it's been an absolute roller coaster. Now, when we look at the actual valuation, it's quite hefty. It's dependent on quite a lot of growth, but it's not as unreasonable as something like a Palantir, per se. Now, which trades at like a 400p. Now, coming back to HIMS, one thing that we can see is that their actual financial metrics are all right. They've been growing year over year quite well, and the story that these charts show are quite strong. You see 50% growth year over year for revenue. You see 21% growth. It's a bit lower than what you'd hope to see at this multiple, but it's still okay. Now, before we start diving deeper into the finances, a bit of an overview of what HIMS does if you're not entirely familiar with them. They mostly just provide generic medications in pretty packaging and with a pretty website, nice ads for the insecurities that people might have with their hair, with their weight, with their sex, anything kind of related to insecurities. They try to sell something related to it. Their website's beautiful. The marketing's great. They had a Super Bowl ad that massively popped off earlier, I think it was last year. But some of these divisions have been struggling recently. For example, their weight loss division was a main driver of growth, and the story of what even happened with that could be a video by itself. I'll be focusing more on their hair, testosterone, and lab testing in this video. But the main story and the main vision for their long-term growth is to increase the upselling of additional services to their pre-existing customers while continuing to grow their subscriber count, adding those personalized solutions, making the customer retention a bit higher, and upselling them on like testosterone replacement therapies and other different therapies related to that. Now, I think their testosterone replacement therapy is slightly up. It's slightly launched with their oral products, not necessarily with their injections and stuff. We'll be diving into that a bit later on. But coming back over to where they are now, year over year, they're still looking pretty good with 50% year over year growth in their personalized treatment plans. Decent metrics, but last quarter that was 89% year over year growth. And if we look at the chart, you can visibly see it start to plateau. We're starting to see more single digit growth in that regard. And if we look at the total subscriber count, well, 21% year over year might sound okay. When we look at having single digit, I think it's like 1.3% quarter over quarter sequential subscriber count growth. That's a massive red flag for a company whose story depends on a growth in subscribers, and they are seemingly early on in their investing journey. Now, another area, if the subscriber count was flat, but the revenues per customer growing at a tremendous rate, their upselling was working, that could be another story, and that could be an okay perspective and wouldn't be as big of a red flag. But we can see that in Q1 2025, they had a peak of their revenue per customer. Now, again, some of that comes down to difficulties they've had with the weight loss division, but there are other competitors. And if we look at the Morningstar report later on, that intense competition is part of why there's a lot of uncertainty and risk associated with the stock. Now, coming down to it, a major portion of their expenses is that marketing spend. They are generally just a packaged generic medication provider. And if we look at their pricing, let's say for finasteride, which is a common drug used for the prevention of future hair loss, the 3-month supply runs at around $22 USD per month. That's around the same price as the competitors that they're showing on their website. Now, one notable competitor that's left out of this is Amazon Pharma. If we look at finasteride provided by Amazon Pharmacy, we can see that their 90-day supply cost around $6 per month. Now, one thing notable is that it's also included in their RX pass, this medication pass that they've been trying to promote a little bit more, where you can get most of the common medications that people need for free. Now, this is important because a lot of people that will need testosterone replacement therapy, a lot of people that will need some of these medications will have multiple comorbidities. They have multiple illnesses that need treatment for, and having it at $5 a month, which in and of itself is a quarter of the price that Hims is selling just their finasteride at, makes it a little bit difficult when you're trying to upsell multiple medications. The cost of staying with finasteride over switching to like Amazon Pharmacy, like the gap is increasingly widened when you come to more and more medications, and so the draw towards Amazon Pharmacy becomes even bigger. Another thing to keep in mind is that Amazon Prime is massive. When we compare how many eyeballs that Hims can get in front of and how much money they have to spend on marketing to get a similar number of eyeballs compared to an Amazon Prime where they can just do an ad campaign on their own website, there's no way that Hims can compete in that regard. Now, we can also see it's not that they're hiding their finasteride or these products either. They're actively putting these medications that Hims and these competitors provide on their front page when they're trying to promote their Amazon Pharmacy. Now, another point to keep in mind is that recently they've been adding on lab testing. They've been doing a lot of CapEx. They're doing acquisitions to add that bit of personalized testing, which could be a revenue generator. It could be an avenue for growth. But Amazon also has One Medical, but they provide a variety of services. Lab testing is one of those. And so again, when we look at it, they're directly competing with Amazon in terms of the products that they're selling. They're directly competing in Amazon where they're trying to expand, and Amazon already has a business that's larger than Hims in this space. They also have a better strategic leverage in terms of packaging, in terms of shipment, in terms of delivery infrastructure. No one can compete with Amazon. Now, these are generally some of the concerns I'm seeing, but a lot of the bullish cases that I'm seeing presented by YouTubers that are saying that we're completely misunderstanding it and that stock's about to explode are relying on this precision healthcare. Data is the moat. If you look at their Q2 results, they were talking about in their investor relations that data and personalized care is the future for their company. They're aggregating a large subscriber base, but again, nothing can compete with the subscriber base of Amazon and the scale that Amazon can operate at. Another point to keep in mind is that Amazon's AWS is involved in drug discovery. It's involved in a lot of different areas. So if we want to say that Hims is going to have a strong moat developed through the research or through areas like that, again, they can't compete with the funds and the leverage and the vertical integration that Amazon has. And that's why I think in the long run, they can see a lot of different concerns. And if you look at YouTube, there's a ton of bull cases being presented that I don't see that many people talking about Amazon Pharma. Now, coming back over to the testosterone and the other treatments they're trying to add. Now, right now they have some oral medication, but if you go to Amazon Pharma, you can get testosterone injections even at a rate that's much cheaper than even the generic pills that they're providing here. Now, there's also all the different types of gels and different ways of getting testosterone as well available on Amazon, which makes it so for Hims to be able to compete with them, they'd have to do a bunch more capex to even have the same products brought to market. And again, they can't necessarily compete with the scale and the efficiency of Amazon in this regard. Now, another point to keep in mind is that Hims talks about having pills like they're equivalent to Viagra. But if we look at Amazon, we see the generic equivalent is also included with the medication pass. We have it also, even if you didn't have that pass, at around $3. There's no way that Hims can compete with them. They have all the drugs already provided, the scale that they will be operating at, the scale that they're growing at. We don't have public information available on how much revenue they're bringing in and how many subscribers they have. But I think that in the long run, if we look 10, 20 years, Amazon can be massively disrupting the space. And it's part of why I love Amazon as an investment. One other thing to keep in mind is that for things like testosterone replacement therapy, a lot of the reason that we see with aging men, their testosterone levels decline, something that's being argued in the research is that comes down to the multiple different comorbidities. So the other illnesses, such as diabetes, being overweight, these things are what's lowering testosterone levels in aging men, not necessarily age itself. So one thing to keep in mind with that is that someone that has diabetes, someone that has obesity, has other medical conditions, high cholesterol, it'll be a lot more convenient for them to be able to go to an Amazon pharmacy, get all their medications for $5 a month, which is a quarter of the price, still be able to get their Viagra, and also have convenient pre-packaged dosing. One thing that Amazon's been improving a lot is the quality of life for their customers. They can provide it in discreet packaging. What's more discreet than an Amazon package arriving at your door? And also, when they provide that medication, they can put it on pre-dosed, pre-packaged containers that will give you the exact date and time that you have to take this medication. This is massive. And again, this is all at around $5 per month. This can be managed. One thing that they've been doing recently, it can be managed by your caregivers off their own Amazon pharmacy or Amazon account. The convenience and the quality of life that Amazon can provide, the personalization and just the reach that they have with their platform, I think that there'll be a massive disruptor in this space and is not being mentioned enough. Now, I mentioned this Morningstar report. If you look at the fair value they give to Hims and Hers, it's around 25 USD. We're looking at around 32 USD as of right now. But when you come back to it, they're also highlighting how they see a massive red flag in that 1.3% quarter-over-quarter growth for the subscriber count. That's a massive red flag for a business that depends on a tremendous growth. If we also go over to their long-term projections, the reason why they're putting the fair value at around 25 USD, they don't concur with the management's estimates of 6.5 billion revenue in 2030. They think that it'll be around closer to 4 billion. In my opinion, even if you don't necessarily want to predict where the exact revenues are going to be in 2030, even if we don't look at it from a financial perspective, I think it's not a sound approach to investing to be going at the player that does not have the best positioning in that industry. I think that by 2030, giving Amazon time to scale their pharmacy practice, have it advertise a bit more on their website, they won't be able to compete with them on pricing. They won't be able to compete with them in terms of reach. And these guidance could actually see a lot more uncertainty in it. And another thing to keep in mind is that when they're comparing Hims to competitors in the healthcare industry, they're comparing it to like Novo Nordisk, other providers of weight loss treatments. But I think, again, the main competitors aren't going to be the drug companies. They're not going to be the companies like Keeps that provide pretty much the exact same thing with a different website and different branding. But I think the competitors will be providers like Amazon, which can operate at a massive scale, providing generic medication. They can have vertical integration with with their medical practices to providing telehealth, and already operate at a scale and have the reach to be able to massively mobilize any advancements they make. Now, do I think Hims is going to crash, become the next 23andMe? No. If you look at the Morningstar report, they also discuss how their finances and their balance sheet look pretty strong. Their financial health is okay. They're still growing, but I think that it's concerning to be looking at a company that has plateauing subscriber growth. Their revenue per subscriber is also plateauing. They're trying to expand and doing acquisitions and capex into spaces that are already saturated with competitors that are better positioned strategically, that have better scale, better leverage, better vertical integration. I just don't think that's a reasonable investment in the long run. I think potentially there could be a bounce back play. I think there could be stuff like that, but I would just be very careful investing in a falling knife that is not in the best position in the market. If you disagree with me, or you want me to dive deeper into what went wrong with the weight loss division or another healthcare company or a company in the stock market, let me know. I'd love to hear what your feedback is. Cheers and have a good day.